Ladies and gentlemen, Bitcoin has been in the same macro price range since the start of November. Now, there's two ways you can look at this macro range. There's the first way, which I actually disagree with. You can look at it horizontally. You can just kind of draw two lines vaguely and say, okay, there's the support, there's the resistance. We've been ranging since the start of November, and that's the range. When we break out, we enter an upside move. When we break down, we enter a downside move. That's kind of the generic way to look at it, a very 101 basic way to look at it, very unnuanced way to look at it. But I actually think there's a much better way to look at this range that better defines it, that gives it a more, effective and kind of articulate structure. Excuse the fact that I just made up a word during that sentence. The lines, right? So we've got the resistance line in orange and the support line in yellow. The resistance line actually stems backwards from the 2017 cycle, cuts through the 2021 all-time highs very well, specifically on the weekly chart, and cuts through the two most recent price wicks. The support line stems back from 2021, cuts through perfectly the two peaks of the 2021 cycle, okay, and cuts through pretty much perfectly on 5 or 6 different occasions here. Now, a lot of people would say, oh, you can't just draw random lines in the chart. Guys, I beg you to understand, these lines aren't random. The fact that they're identifiable, the fact that they're playing out so well in the top line's case over 7 or 8 years, right, in advance from when it first formed, and in the bottom line's case, 4 years from when it first formed, is more than just a coincidence. For these lines to be a coincidence, I mean, it would be a lower chance than winning the lottery at this point. So in my view, this is not necessarily a horizontal range. It's actually a diagonal range with lines stemming backwards from into cycle, right? From the last cycle and the cycle before that. So we're on macro support here, but we're in the same range. Either way we look at it, even if we look at it horizontally, even if you disagree with me here, it's still a range. It's still been going on for quite a long period of time now. In fact, if we're being precise, from when we first entered the range to now, it's been about 87 days. And the question I'm asking in this video is that normal? Right, an 87-day consolidation at this phase of a cycle, is that normal? Is that too long? Is it abnormal? Do we risk breaking the cyclical structure here? Well, the good news is we can easily do a comparison because we know that Bitcoin moves cyclically. We know that cycles have various similarities, and hence we can compare this consolidation to consolidations we've seen in price cycles and determine whether it's normal or not. We can do that not only on Bitcoin, but we can do it on Ethereum. We can do it on the total 3 cryptocurrency market cap chart as well. That's exactly what we'll do today. It shouldn't take too long. Ladies and gentlemen, without further ado, we'll look at the exchanges and get into the content. Guys, you need a good exchange. You need an exchange that you can trust with your money. You're literally leaving your money in a wallet on this exchange, blindly, on these exchanges blindly. And you want something that is reliable, historically speaking, at the very least. And that's what Bittunix is. Bittunix is global non-KYC. It's never been hacked before, and it has transparent reserves available. So you can look at the reserves and see that they have the money to back up and insure your funds if something does go wrong. This is very, very important. Again, the global non-KYC part is extremely important as well for a lot of people. So you can sign up from anywhere in the world with just my referral link down below. If you use that referral link, you'll get a 15% trading fee discount attached to your account for life. So every single buy and sell you make forever will be discounted by 15%. Absolutely exceptional. If you want a bigger exchange, which, isn't really necessary, it's just better on the eyes, I suppose, BitGet is one of them. Top 5 trading volume, very minimal liquidity issues. The only problem is it's not available in the USA, so you can use it from anywhere except for the USA. But if you are from the USA, or if you're just looking for a non-KYC exchange, you can't go wrong with Bittunix. I use them both personally, actually, and the links are down below with those 15% trading fee discounts, so check them out. Let's get into the content. It's going to be quick today. There's not a lot we need to do, but we need to do something. We need to, first of all, identify how long we've actually been ranging here. There's kind of 2 ways we can do that. Well, first of all, we can measure, and this is probably the most logical way that people would look to, we can measure from the top, the peak of the range. Okay, and we can say, oh yeah, we've been consolidating or correcting for 51 days. The problem is, this was higher than this one here. So this recent peak was actually higher than the first peak here. And so it leads to some discrepancies. And I would say that's actually an incorrect way to measure the range. I would say we measure how long we've been ranging from when we entered the range. And obviously we have that diagonal line. If we just draw it vaguely, it was something like this, right? That diagonal line from a prior cycle, something like that. I would say we measure this range and how long we've been in this range from when we actually entered it, when we actually broke the support line that's holding it up. And that would be from around here. Therefore, we've been in this range for about 85 days. Is an 85-day consolidation abnormal? That's the question we're asking at this phase in the cycle. Well, we can go back and take a look. Now, here's what's important to note, okay? Not every cycle is the same. We know that. We know that so clearly. We look at the structure. Let's just delete everything here. We look at the structure of price cycles on Bitcoin, okay? We see the first cycle we ever saw, two distinctive legs. One leg right there, a dramatic pause for many months, and a second leg right there. 2017, it was literally just straight up, right? 2021, two significant peaks, okay? And this time, it will probably be different as well. We are in the 4-year cycle trend, but that doesn't mean that the cycles are exactly the same every time. That just means they last the same amount of time every time. The structure can be different. So when we're asking the question, is it normal to see this long of a consolidation? It kind of doesn't really make sense as a question to start with, because nothing's really normal in terms of the structure between these cycles. These cycles are all very different. So comparing the structure of one cycle to the structure of another doesn't really make sense as long as the macro uptrend is still intact, because that's the only thing that's being coherent, macro uptrends being intact, other than in 2021 briefly, but that's a whole other point which we will get into. But we'll do it anyway. We'll do it anyway just to understand what we're doing here. So 85 days of consolidation, no real correction. We haven't actually broken down. We've just seen sideways pretty much. I know it seemed like a lot bigger than it is because of the altcoin market. We'll discuss that in a second. If we go back to price cycles, what's happened, okay, in these bull markets? Well, first of all, we'll look at 2021. We saw a consolidation lasting 31 days right here, a massive correction. We actually saw a breakdown there, unlike right now. 18 days, 11 days, we saw a 98-day correction right here with actual breakdowns as well, but we overall held up the cyclical structure, okay? The first move over the all-time high and the correction that formed our basis here for support through which the altcoin season started was held onto. That's why we knew the bull market wasn't over there. We also knew the bull market wasn't over because even though we saw a massive move for downside, a lot of our macro indicators were still being held for support at that period of time. On top of that, the 4-year cycle itself suggested the top wouldn't be in until later in the year, and that was not, of course, the right time. So there's a few reasons, and look, you can go back on my content at the time if you really want the full dive. I literally predicted on the day, I think it was one of my first videos in this YouTube channel, why we would bottom here. The point is we saw a 98-day correction there. It was kind of abnormal, so it's not really a data point we want to be looking at too seriously. 29-day correction here. So from the last cycle, nothing really as big as what we've seen right now, right? But the difference is, right now we've seen a lot of consolidation, right? 85 days of consolidation. We didn't see that in the last cycle. Usually the consolidations were much smaller, but they were much more brutal as well. So we saw, 30-day corrections instead of 80-day corrections, but they were actual corrections. We actually dropped properly. We went down 32% on this one right here. Okay, we look at Bitcoin right now. It's like, yeah, it's been going sideways for a while, but overall, this isn't really a correction. We've gone down 17% at the max, mostly within a 15% range. Okay, so it's been a consolidation rather than a correction. We look at a cycle before that, 2017, and we see same kind of story. Now, look, 2017 was a little bit more like this time. We had some consolidation phases, 54-day consolidation right here. But again, much more brutal, right? A bit shorter and much more brutal. 39% drop. Another one right here, 39 days, but also a 40% drop. Another one here, just 9 days. But the drop, again, was major, 31% drop. And we look back at the very first cycle on Bitcoin, and this is when we get a very abnormal structure. And it's probably because the market cap was very, very low at the time. It's kind of hard to compare between this cycle here in 2013 and the current one we're seeing. But we saw a 211-day consolidation, right? I kind of don't like using that data point because it's just so long ago, and the market dynamics is so different now. The point I'm trying to make is this. Although Bitcoin has been consolidating for a long period of time, right, 85 days to be exact, and yeah, that is longer than we have historically consolidated, but we're also not really correcting. So we're kind of trading off here. We're trading the correction for more time in consolidation. And there's nothing inherently wrong with that. And we can't really say it's abnormal, right? Because, again, the entire cycle is abnormal structurally, right? Now, in terms of date range measurements and date range trends, it's very coherent. But structurally, it's always been abnormal. These cycles are all different. And right now, when I look at this chart, and I see this consolidation, I don't tremble in fear because of how long we've been consolidating. I actually take a sigh of relief because we're not dropping downwards massively. Now, that can only be said about Bitcoin though. If we look at Ethereum, we look at the total 3 cryptocurrency market cap, we do see these big drops, okay? And people have witnessed it and they've experienced it in their portfolios over the last couple of weeks, that's for sure. We've seen a drop on Ethereum from the recent high, about 50% at this point. It's very, very major stuff. Total 3 cryptocurrency market cap dropping again about 34%. Very, very major stuff on altcoins specifically. But we have to zoom out here. We have to understand that these structures are actually not broken, right? We look at the kind of resistance zone that separates bull market from bear market in the price cycle. We look at that one in this cycle as well, and we see we're still actually holding on to that zone very clearly. We can see that, let's make it yellow, the kind of bull market phase, the bull market zone is up here, right? The bear market zone's down there, and we're still above that zone. So although the big drop has occurred, it's just been a very volatile range, much like the corrections of prior cycles were very volatile. It didn't mean that they were actual breakdowns. It just meant they were volatile corrections. So there's kind of two things you can do during a pause in the uptrend that is a bull market. You can see these volatile corrections dropping downwards massively and quickly going right back up, right, grabbing liquidity. Or you can see what we're doing right now on Bitcoin, which is a drawn out consolidation before swinging to the upside, ideally. Now, we've seen that consolidation on Bitcoin, but unfortunately, altcoins have seen the more volatile, spiky, corrective move. And that is simply because, right, this consolidation on Bitcoin is happening a little bit too early for the altcoin market. The altcoin market has not established massive degrees of strength yet. It's still all up in the air. People have not seen what altcoins can do yet, and so they're not very comfortable holding onto them in wake of uncertainty on Bitcoin, which means they're very willing to let go of their altcoins during Bitcoin consolidation, which has led to altcoins dropping. But structurally, nothing's actually been damaged here. So I suppose the overall conclusion of this video, and it's been a bit of a hard video to follow, I understand that, and the narrative hasn't been very straightforward, but the overall conclusion is this. Is what we're seeing right now abnormal? Well, kind of. Yes, it is abnormal. But the abnormality itself is normal because we've never seen a coherent pattern or trend in how these bull market structures play out, right? All we've seen is them lasting the same amount of time every single time. We have not seen any sort of similarities on any major scale. Sometimes we see local similarities, and we highlighted that in the months that have followed or that have passed. But they just structurally are always different. And so the fact that this correction is structurally different to what corrections usually are in bull markets is actually the norm. Guys, thank you for watching. I hope you enjoyed. Again, check out the Bitunix and BitGet exchanges. Bitunix, global, non-KYC, never been hacked before. Very big stuff there. BitGet, top 5 trading volume, available to everyone outside of the USA. My referral links are down below. With those referral links, you get a 15% trading fee discount. You cannot go wrong. You're helping me out and you're helping yourself out by getting on a good exchange. So go ahead and get to it. And if you are interested, of course, we have the VIP group on Telegram where we post altcoin trading signals 4 times a week to you guys. You get a group chat as well, 24/7 accessible, 145 other VIP members to share idea with and discuss in that group chat 24/7. And if you wish to join, yeah, it's all there on Telegram, guys. Check it out. Thank you for watching. Hope you enjoyed, and I'll catch you soon.